Recording in progress. All right. So, like we talked about, sorry, excuse me, had a yawn there. All right. So, like we talked about earlier this week, this session is going to be, kind of recapping and then also charting as well too. Excuse me. Um, so we're just gonna, go ahead and get straight into it. As far as the trade recaps, we're gonna do just Netflix and cost, and then we're gonna talk about based off of what we saw in the sector review, we'll talk about some tickers that we'll chart it out, kind of give you guys an idea of a charting session, and then we'll go from there. Right. I'll try to incorporate both ICT and strat concepts. And of course, if there's any questions, please don't hesitate to ask. Let me see what. I mean, as far as the Jackson Hole goes, I'm like me personally, I'm not really expecting much to happen because I know the market may think that he's going to talk about rate cuts, but I think the last time he had, all right, so from my experience, and a lot of I've watched a lot of Powell's speeches, like when he goes to like colleges or conferences or whatever, like honestly, it really don't do much, right? He talks, like, don't get me wrong, but he doesn't really, he stays away from monetary policy as much as he can. Like I know people ask him questions or whatever. So I mean, honestly, the way the chart is looking is bullish. If he so like my approach to it is that we're probably gonna stay bullish unless he says something stupid, right? If he says something like we're not gonna do rate cuts or there's no indication to do rate cuts at this point in time, then probably, yeah, you'll probably see a dump. But based off sector review, SMH, tech, they're all looking bullish. So again, unless he says something, pretty stupid, then I'm pretty sure we're probably gonna be okay. At least that's my theory. Don't hold me to that, but yeah, that's just the way that I'm looking at it. All right. As far as trade recaps, we're going to talk about Netflix and cost. And then I think Phil had called. Hold up, there was one play that Phil had called, and I wanted to go over that because I think it hit big, right? So what was it? It wasn't PDD. There was something that, or maybe, oh, H&R Block. So when did he call this out though? Earnings. Lotto H&R Block. He put that out on 8/15. So yeah, we can chart that one out as well too. Just to kind of give you an idea. Obviously, I'm definitely not the admin that will call earnings, and I'm not saying that like it's a bad thing. I personally don't like to play earnings because to me it's 50-50. Which obviously every trade you jump into can be it's gonna be 50-50. It's just in my experience, it's just like that gamble. But anyway, we'll chart it out beforehand, kind of so you can kind of see what it was looking like before earnings came out, and then we'll go from there. H&R Block. All right, so first thing that we're going to jump into is Netflix, and again, from a charting perspective, before I jump into it, the indicator that I have on is super order blocks, right? That's where you're seeing it, but I only have it showing the order blocks because we recently talked about that in the last session. So just real quick, order blocks right here. So bullish order block, right? It's basically just to keep it as simple as possible. I know I can make it like a more complex definition. And if you want the more complex definition, please go to my channel, or is it in the education channel? Wait, I think I put in there. Let me check my channel real quick. It is, yeah, it's an education channel then. So go to the education channel. You'll see I made four slides, on the key concepts of order blocks in ICT, right? So um, just real quick, right? You basically, when you have a red candle and then you get displacement, bullish displacement, right? So bearish candle, and then you get bullish displacement. And again, displacement is the candle closing above the red candle. That is an order block, right? So anytime you have that, right, order block, order block, order block, right? Now you can use this indicator to help you out. After a while, you can turn it off. That's the reason why I ultimately don't have it showing on my charts, because at this point, to me, they're pretty easy to identify, especially if they end up being bearish hammers, right? So if you get a bearish hammer followed by a bullish candle that closes above it, order block, right? And on the reverse side, right, you have, let me stretch it out a little bit. You have a bearish order block, right? So ideally shooters, right? If it'll be basically, it'll be a green shooter and then followed by a red candle that displaces below it. That ends up being a bearish order block. So you have one there. You have one here on this inside candle. So Holy Grail setup, right? For those straters to help you identify some of the ICT order blocks. So you end up with a Holy Grail 3-1, and then it was a 2 down, right? So inside bullish candle followed by a 2 down that displaces below the low of that inside candle. That ends up being an order block. And ideally, what you're looking for is how to trade it. Essentially, is when it comes back to retrace into the order block and then bounces off of it, whether it fills it, or if it trades down to about 50% of the order block and then bounces, kind of like what you're seeing here, right? We get the downturn into it, and then a couple days of, well, sort of bullishness, right? Green candles, double inside, and then we get that 3 up, right? So ideally what you would do is kind of enter at the close or at the open of the next candle around the close, and that's where you'll see that, usually you'll see some sort of a bounce, right? And same thing for a bearish order block. If price comes back to retrace into that order block, rejects, and then heads down. So essentially you're looking at something like this, right? Trades up into the order block, rejects, and then trades right back down, right? That's when it'll hit a, actually, let me show, boom, and then change that to a bearish order block, right? Price trades back into the order block and then rejects out of it. And so when you get that rejection, that's where you'll use that as your entry. If I'm not mistaken, the top of the bearish order block would be your invalidation point. And then, yeah, if it works out in your favor, it continues heading down, then great. Okay. The reverse for a bullish order block. So let me change this into a bullish order block. So let's pull this down. So if price comes down into the order block, bounces off of it, and it doesn't have to hit the 50, it could, touch there or fill it completely. Doesn't really matter. The point is, once you get displacement out of the order block, you can use that as an entry. Your invalidation point would be the low of the order block, and then yeah, you take that entry. If you're going to trade ICT using order block theory, remember, as we've said many times before, Sal, as well, there's many different trading strategies within ICT, right? So you don't have to use them all. Just, master. Again, it's just like what I talk about with the strat when it comes to mastering the combos and the setups, etc. You're mastering one concept at a time. Don't try to do like 3 and 4 all at once. Okay. All right. Trade recap. So Netflix called out by Sal last Sunday, right? So he was bullish on it. I don't remember what contract he suggested, but we can go ahead and figure that part out, right? So starting on that Friday, how we ended last Friday, we ended it with a 2-2 continuation. Majority full time frame continuity is bullish, right? We also coming from the lows as well too, right? We took out this low with that gap down, right, from that Friday into Monday. So we took out that low, and then obviously had a bullish Monday. I mean, technically speaking, we could probably taken Netflix swing since that last Monday on the 5th, but obviously if you missed that, so we called it out this week. So entry would have been 636.62, And then your targets um, would have been, honestly, you probably would have targeted that 646, 70, 71. If you're doing strat, it would be the very next high. But obviously, when you have Netflix as with the ATR that it has, you're probably not choosing that target or that target. Honestly, you're probably going to be choosing the highs because we know Netflix can move. So for me, that's the way that I would choose my targets on the daily, right? I would probably just be choosing the highs, right? Um, and the reason why, again, is because of the ATR, right? And then also this is liquidity up here as well, too, right? So if price is moving, again, we talk about ICT concepts. We talk about price is moving from external range liquidity to internal range liquidity. If there's no internal, then it's going to move from external or should move from external to external, right? So as as this is coming back, as you can see, there's no fair value gaps along the way. And if any of you have been paying attention to Casper or T trades or even ICT, when you're looking at trends and how price is moving, whether it be a downtrend or uptrend, one of the signals of the strength of trend is when you start seeing um, fair value gaps, right? Strong moves to the upside, creating fair value gaps. And if it's going to continue with that trend, if the trend is strong, you'll see one fair value gap creating another, creating another, creating another. As you can see in this downtrend, there aren't any fair value gaps that are being created along the way. Not any strong ones. Well, no, actually, none. Yeah, none. Well, I guess you can count this one. Yeah, you can count this gap here. So one, right? But obviously you get displacement above that. Um, actually by this candle, by that Thursday, you get that displacement above, right? So um, where was I? Oh, so yeah, so the entry would have been 636.62, right? Let's see what happens on the very next day. Oh, did I go too? Yes, I did go too fast. My bad. Sorry about that, guys. My apologies. Friday would have been the Friday. There you go. Boom. Okay. Did I choose the right one? No, I did not. Sorry, y'all. My bad, my bad. Monday, Tuesday. There we go. Okay. All right. So now Monday hits, right? Again, as we looked at, right? We triggered to the upside. So entirely up to you. If you wanted to take that entry once it took, that's fine. It would have dropped back a little bit, probably would have messed with your head a little bit. But overall, the daily candle is still green. So is the weekly, so is the monthly. So honestly, from a swing standpoint, if I'm going 2 weeks out or even a week out, I'm probably not cutting on Monday, even though it came back below my entry and the trade is probably a little red at this point, right? For me, I would hold it into Tuesday. So let's see what happens on Tuesday. Tuesday, obviously we get the move to the upside, the move that we want. At this point, your first target gets taken out, 646.71 gets taken out, right? So at that point, you can either start reducing your position. You probably would have targeted contract wise, either between 648 and 652. So more than likely that 650 call. Sorry. So once it hits that, right? Obviously, a move from 636, we're talking a $12 move. That contract should be pretty decently, in the green. At that point, I would recommend probably reducing just a little bit, maybe not all your position, but just reduce the position just a little bit. However, we did still end up two up in force. So if you decided to hold your whole position, then I wouldn't be mad at you for that. The next day, we get the second target day. I definitely would have reduced position at that point because obviously you have a huge move from 652 all the way up to 678. I would not hold through all of that. I would probably reduce position at that point. Let's see what happens. Right, so we end up with our first red day on the Thursday. Again, this is why we reduce. If you definitely didn't reduce on Wednesday, then you probably should have reduced somewhere around the highs on that Thursday. By that point, at this point, it would be greed, in my opinion, if you're trying to hold through that whole entire thing. And then Friday, definitely the runners. I probably would have taken the runners off the table, but this ends up being a really great trade of patience. We actually end with yeah, very good run from 636 all the way up to 678. So what's that? Like a $40 run right there. So yeah, definitely a great trade. You could have gotten in the 650, 655, or even 660s if you wanted. I probably, even though it touched, I probably wouldn't have like gotten 670s, but again, that's entirely up to you. But yeah, this would have been an amazing trade, an amazing swing trade. Probably would have exited either Wednesday, Thursday, or Friday. So it would have ended up being a 3 day, 4 day, or 5 day trade. If there's any questions about that, feel free to ask. But just kind of giving you, like, mentally speaking, like how what you probably should have done at that point to avoid, losing money on that trade, like for holding it too long or whatnot. Now, it did end up being a two up. However, we did get a little bit exhaustion. This actually makes a broadened formation. So we'll see what happens on Monday. I believe XLC was still looking rather bullish, but we'll see what happens on that Monday. That's a pretty big move. Um, I wouldn't be surprised if there's any profit taking along the way. More than likely, probably for those that got in down here. Because remember, like I said, we probably could have got into this from what's that, about 606? 60, yeah, 606. So yeah, from six, we'll say 605, from 605 all the way up to almost 680. Actually did hit 680, right? So that would have been probably time to, great swing, 2 week swing, probably time to go ahead and exit that trade at that point. All right. Next recap, we're gonna go with cost. And why are we seeing cost? For a couple different reasons, right? First off, strat wise, full time frame continuity is bullish, right? Secondly, you're coming from the lows of, obviously this is a broad information. If you can't see it, here you go. Right? Beautiful. Right? So you're coming from the lows there. If you draw the top of your broadening formation, right, as you can see, hell of a lot of space, right? Hell of a lot of space, right? So you actually end up with kind of a power of three situation here, right? Here's your accumulation, right? That's your high, right? So then we run it up, make higher highs, only to pull it right back down. There was your manipulation, and then the third move was the distribution back to the downside, taking out this low, and we definitely distributed all the way down, right? So now we're, after making those lows, we're bouncing off the broadening formation. And what we also see ICT wise, we see an order block that gets formed here, a bullish one at that. And then you actually end up with a stacked order block fair value gap combination, right? So the red candle is your order block, and then here is your fair value gap right here, right? So whenever you see those two, it's not always a guarantee, more like a probability, but whenever you see a fair value gap stacked on top of an order block, when we're talking in terms of bullishness, that usually is a sign of bullish momentum. And more than likely, that momentum is going to continue through. Okay. And again, not always a guarantee, but more than likely it's going to continue through. So this what we would be looking for is another fair value gap creation. So in other words, the next candle, we're expecting that to be a two up continuation, creating another fair value gap. Yes, we do get a little bit of resistance here with this bearish order block. However, as you can see, the two up, I think, just barely displaces above it. So therefore invalidating that order block. So let's see what happens next. Oh, sorry, forgot to chart it out. My apologies. Obviously, we were all pretty much bullish on cost, so I'm not really going to draw it to the downside. Your entry would have been 857.77. And again, this is a mover. It almost moves $20 a day. Again, not going to be $20 in one direction, but we know it's a mover. It's volatile. So for me, technically strat wise, my next target is going to be this high. However, since I know it's a mover, I'm probably going to be targeting this high instead. Let me change that to, where's my target? My bad. Probably going to be targeting that high instead. And then I'll probably just give myself time. I don't like really trading weekly, so I'll probably go 2 weeks out. Yes, I know it's going to be more expensive. If you want to trade weeklies, that is entirely up to you. It's just a personal preference for me. So my two targets are going to be up here. Once I hit 857.77, I'm either looking at the 890, 895, or possibly the 900 call. All right. And again, if you're going 900, I definitely would have gone at least 2 weeks out. All right. We know that we have a little bit of potential resistance here with these highs here. So there is potential that we could have rejected. Obviously, most of us, well, if you're paying attention to cost charts, you probably know how it ended. But again, I'm talking in the mindset of if this was on Friday heading into Monday, right? Seeing these highs. And then also, even though it's not currently marked out, seeing this fair value gap. That's a bearish fair value gap, right? So I know that yes, we're currently in it, but I also know that we could potentially hit the consequent encroachment and reject as well too. Doesn't mean that you should be afraid to enter the trade. It's just you need to be aware of where price may have some issues climbing, right? It may reject here and pull back, or it may push all the way through, but you still need to be aware of that. So let's see what happens next, right? So what did I say, right? When we get that bullish order block combined with the bullish fair value gap, we're looking for bullish momentum and we're looking for another fair value gap to be created. And that's exactly what we get here. We get another fair value gap created right here. All right. Let me stop a second. Okay, good. I thought I heard something for the chat. All right, strat wise, we get a 2-2 continuation. So again, full time frame continuity is in our favor. No reason yet for us to want to get out of this trade. I am going to redraw this bearish fair value gap and see that we did hit the 50, the consequent encroachment of that fair value gap and rejected, right? But again, we are not bearish, so that doesn't, it just tells me that we rejected so far, but it's not a reason for me to want to exit the trade just yet. Next candle. Next candle, we go inside, and again, we're rejecting at that consequent encroachment. That's Tuesday, all right? However, it's an inside candle, actionable signal. So again, it doesn't make me want to exit the trade. But honestly, probably some people probably would have been biting their nails at this point, right? Like, because it's not doing anything. Meanwhile, if you got in weeklies, theta's probably burning just a little bit. Probably not entirely, but just a little bit. We get a double inside on Wednesday. And this is why I say give time, right? Because again, during Tuesday and Wednesday, right, with high theta, your contract's probably getting chopped up. Okay. So far, this consequent encroachment has proven to be pretty strong resistance. And again, this is the reason why I say you gotta make sure you chart these things out and be aware of potentially where you could have some resistance. Seeing this would automatically make me want to go 2 weeks out instead of 1 week, because I know that even though I'm ultimately bullish and I think price can ultimately push through this, I would rather give it more time so that my theta is not affected, or time decay on my contract is not as affected as it would be if I had gotten a weekly. Let's move on to the next. And then we finally get the gap up and we break through after that double inside, right? Again, this double inside days would not have made me want to exit the trade. However, definitely going back to that 2 week thing, you definitely should want to give it a little bit more time. Yes, I know it's going to be a little bit more expensive, but you should want to give it a little bit more time. So we definitely get the two up, right? We get the gap up as well too. So we could not displace outside of the fair value gap just yet, but we are above, we did displace above the 50%. When we do get that displacement, again, it's not always a guarantee, but if we displace in the upper half, high probability we're probably going to continue to push out of that fair value gap to the upside. Okay, no questions. But we didn't do it yet. We didn't do it on Friday. So far, though, is if you had gotten into a swing 2 weeks out, not a still not a bad trade, right? Yeah, I know Friday would have been, you probably would have lost some percentage there. But if you go on 2 weeks out, I probably would still hold on to this. Um, Especially with the bullish order block below. We definitely have the gap fill right there. It definitely rejected that so far. It's respecting this previous high as well, too. So if you're still in the cost swings, I would wait to see what happens on Monday. But you got in, where was it? Friday into Monday. So from 850, was that 857.77 and got to the highs of 881. So not bad. If you took profit on Thursday, that wouldn't be a bad thing. But if you stayed in it, we'll see. We'll see what happens on Monday. XLP overall still looks bullish. So we'll see if this two down turns into another bullish order block, and then we'll continue. We'll see if it continues up. If it pulls back, what I would wait to see is how it responds to this consequent encroachment. If it still ultimately displaces above it, then depending on how much time. Well, it also depends on how much time you have on your contract as well, too. So if you don't have that much time, I'd probably say get out. But if you've given yourself enough time on the contract, then I would say you could probably hold through. We'll see what happens if we can get above it and possibly attack the the 890 target, 896 target. But again, based on how XLP is looking, it's still looking rather bullish to me. So, and I know cost is a big driver of that. So I'm still ultimately bullish, especially with the higher time frames. I'm still being bullish as well too for cost. All right, no questions there. All right. We actually have a couple different tickers to look at as far as for this week. Let me go back to my notes. 1 second. Oh shit, it erased. Damn it. Okay. Well, I remember. Okay, I remember one. 1 second. All right. So cloud sector. Actually, let me show you real quick. So cloud sector, let's start off with I'm not going to go over the monthly because that's in my sector review, but with the cloud sector, we got the 2-2 reversal on the weekly. So we're looking for continuation and the creation of that bullish fair value gap, right? We did get displacement outside of actually, let me just show you. Let me switch it back. So it's probably easier if y'all see, right? Boom. There. So we got displacement above this bearish fair value gap that got created on this downtrend. We displaced up and out of it, right? So invalidating that fair value gap. That ends up being an inversion fair value gap scenario. We'll talk about that one in the next couple of sessions. But what we're looking for now is for the bullish continuation up, creating that bull fair value gap, right? And probably to attack these highs on the weekly. And then also the daily, we're looking for the 2-2 continuation as well, right? So with that being said, CRM, let's talk about that. Let's first look at it on the weekly. As you can see, very similar to what we just saw on the cloud sector. Obviously, no fair value gap created. However, strat-wise, what do we get? A 3-2-2 rev strat. So again, we're looking for the 2-2 continuation on the week to probably attack this double top up here and see if we can get displacement above it. If so, then remember, price is moving from external range liquidity to internal range liquidity. So we're looking to attack this bearish fair value gap here. If we push through that, then more than likely that's going to be your next target. I'm not saying this is all going to happen in 1 week, just for the record, right? However, I am going to mark this out as a target on the weekly. I'm going to mark out that 3 as a target. I know it's a pretty close target, but I'm still going to mark it out either way. And then I'm also going to mark out that next high as a target as well too, buy side liquidity being out there. Looking at the daily, we end up with an actionable signal. We end up with the hammer, right? So fair value gap gets created. This is a bullish order block, right? Remember, it's a bearish candle followed by a bullish displacement above. That's what makes it an order block. And then you also get a stacked fair value gap on top of it, right? So bullish order block stacked below a fair value gap. So we're looking for bullish momentum to push up through the high of this three, and then ultimately to get to next level, which is 266. If we take entry, then we're already automatically above the high of that three. Entry would be 263.60 for CRM, which would, and then we would push up. Oh, we have a gap fill here as well too. So we're looking to complete the gap fill. Let me draw that out real quick and then just label that gap fill daily. Okay, so we're looking to fill the gap. Entry at 263. We're looking to fill the gap at 267. And then strat wise, my next daily target is going to be up here, this inside candle, right before you hit the bearish fair value gap. So probably wouldn't recommend getting a weekly, but I'll probably again get 2 weeks out. Earnings is not until the 28th. Yeah, so yeah, so I would look at August 30th contracts, especially with earnings being on the 28th. And I would, my personal contract, I will say is probably look at the 270s, right? So if you get entry at 263, push up through the first target, fill the gap, and then again, if you end up somewhere in here, you know, hopefully around 270, but really you're hoping that it hits 270, 287, should be a pretty profitable trade. Excuse me. All right, so again, 270. I don't know what we're looking. What's the price of it though? CRM for August 30th, 270. Pretty expensive at 870, but yeah, I'm not really comfortable with. I mean, if you're gonna do weeklies, make sure you get close to the money, right? I would probably say 262. I'm not 260. I'm sorry, 265 or the 267. 265 on for this week is asking 266 a con, and for this week 267 is asking 175. So yes, cheaper but less time. So entirely up to you. Entirely up to you which one. Just remember, if you're going to go weekly, you're going to have less time on it. This is a mover, right? $6.80, basically $7 a day. So it is possible for it to get to 270 by the end of the week, right? So getting the weekly would not be an unrealistic contract. Okay. That's CRM. Let's see. What was it? Was it ALB that you told me about? I think so. Oh, I know where my watch list is. My bad, y'all. Give me 1 second. There you are. Okay. I know what we're going to look at next. So Albemarle, right? ALB. All right. So what are we seeing? We're seeing a sweep on the weekly. We're seeing a sweeping of the lows, liquidity sweep here, right? And last week we talked about the difference between a liquidity sweep and a liquidity run. If you don't know the difference, please go watch that the video. It's last Sunday that we talked about the difference between the two. But on the weekly, yes, it's not bullish. However, we did get a liquidity sweep. So when we get liquidity sweeps, there is a chance of well, more not high probability, but probability of a reversal back to the upside. So that's what we get on the weekly. Now, when you look in on the daily, right, you get a 2-2 continuation after a 2-2. Actually, we go 1-2-2 rev strat. And then on the Friday, we close as a 2-2 continuation, just above that liquidity sweep, right? Um, order block here, right? Here's your bearish order block, and then you get a fair value gap stacked right on top of it. So again, what does that signal? Probability of bullish momentum. Your entry on the daily would be 79.88. Okay. This moves a little bit over $4 a day. So I think this was set up for a pretty great, pretty decent swing, probably targeting the highs up here. Unless Sal, you had a specific contract in mind. I don't know if he's still in here. Is he? Or did he leave? Well, if you're listening, Sal, you could put it in the chat if you had a specific contract in mind. But for me, this is probably where I would choose the 85 call, right? And again, you would just get some time. But I haven't really looked at the contracts. Give me just 1 second. Mm. Based on volume and open interest, the one that I like is for September 20th, a month out. However, it's just only because of the volume and the open interest. The others have less than 100 volume and open interest on the weeks previous to that. So just be careful with that. I don't want you to get in a situation where you're not going to be able to exit the trade. However, if you want to go a month out, it's going to be obviously a little bit more expensive. However, I think it'll be quite profitable, right? The week we got a liquidity sweep. On the daily, we got that 2-2 continuation to the upside. And I would say, yeah, my targets, I would probably be targeting that, but obviously you have some other targets along the way, 81, 82, and then probably, what's that, 83? Yeah, so as it takes out the targets, you can go ahead and just keep continuing to walk your targets up. If you go with the September 20th, you've given yourself more time as well too, possibly for price to attack potentially this gap fill up excuse me, up here, right? So up into the 90s. You could also, if you're gonna swing out that far, you could also possibly look at the 90 call as well too. The reason why I'm choosing 85 is just because so far full-time free and continuity is also against me. But ICT wise, I like that liquidity sweep. And I like how we set up that bullish order block and then also the fair value gap. So I think there's definitely potential for this to continue moving to the upside. Hold up, let me see in the chat. All right, well, if you want to type it out.
Hey, Tensho.
Yes.
I just talked to Sal. He said he's still there. He just can't talk. He's in a lot of pain right now, but he said he does have a lot more to say about the ticker, but he just not feeling well.
I saw him put it out here, and that's fine. I would just say look into his channel. He probably type it out for the week as well too. But yeah, good setup as far as sweeping liquidity, and you might be able to catch that early reversal back to the upside for ALB. I think Adobe. Let me go over. Was it Adobe? I think I've written that one out as well too. Yeah. So with Adobe, I had talked about this last week, but I think it still has room to go. Oh, yeah, I can get rid of you because you already got violated. You fell back into the order block. So you got mitigated. Also, the fair value gap fine. You also got violated as well, too. So we can get rid of you, all that other stuff. I'll delete all that other stuff later. But classic case of price retracing back into a fair value gap on the weekly for Adobe. And as you can see, we get the bounce, um, followed by a 322 rep strat, right? So we're looking for, bullish continuation, creating that fair value gap, probably to attack, first attack this high at 561.98, but ultimately to get back up to this high. You do have this high along the way as well to 580, 585. So what I'll probably recommend, let's go over to the daily real quick. Since it's a mover, I probably would recommend looking at the 580 with time. And if it runs up to potentially, 585, 590, 600 possibly, hell, even better. Close on Friday as an actionable signal, right? Um, so we're looking for the 212 continuation, or it could end up being a 212 down. If that does happen, look for it to probably fill this small gap that gets created here, right? So your call entry would be here, 554.76. If it triggers to the downside, I'm gonna be honest with you, I'm probably not gonna take puts. You got full time frame continuity, that's bullish. Um, I would say it's probably just trying to fill this gap fill. If it drops further, it is what it is. I'll be wrong, fine with it. I'll look for it to find support around this inflection point, previous high right here at 538, and then for a potential bounce back to the upside. But I think what we're looking for is to attack the high of this three. I think this was that Thursday. Yep, that Thursday where we had job numbers come out. And I talked about that in the sector review where um, price action basically came back and to test this. So I think that's what Adobe's going to be doing this week, barring any outside factors, coming back to test this 561. So if you want to do weeklies, you can, look at the 560. But if you're swinging our price, say, 570, 575, 580, like anywhere in between there, I would say choose. Hell, if you want to give it more time, like, go a month out, I'll probably say even look at the 600 call. Target. Boom. That'll be one target, 570. Your next target will be here at 572. But again, like I said, if it were me, I'm probably I'm probably going to get time and just look for it to push through all of that, excuse me, up to 580. But yeah, inside candle. If it does drop, potential, look for that two down to wick, right? If it wicks from the lows, you're probably setting up a one, especially if it closes above the low of this inside candle, you're probably looking for a 122 rev strat back to the upside. If it automatically triggers to the upside, gives you that 212 continuation. Obviously, we want it to displace above, in other words, close above the high of that inside candle. Then yeah, 561's in view. If you're doing weeklies, I'd probably say 560, 565, or 570. Because again, ATR is at $13, so it is possible that we get there. However, I would probably say again, get time on it, right? So if you're swinging, start at the 580 call, 585, and then if we want to look to the left, as you can see, there's another target high up here above 600, right? So you do have some inflection points along the way. I'm not going to sit here and ignore them. 590 there, and then the other one is here, 604. So again, if you're swinging, I would say anywhere from 580 and above. 580 and anywhere from 580 to 600. If you're doing 600, definitely get a month out. You should definitely be going into September with that, September 20th, with that. Okay. Earnings is September 12th, right? So just be aware of that. Could be the beginning of the earnings run up. And if you're looking at it, you see like this is all just strat wise. This is if with the bullish push, this is all just a TTO back up to 580. Okay. So that's Adobe. We talked about financials as well. So let's take a quick look at BAC. All right. So we like the financial sector. We like what it was showing. So this is more small account friendly than anything else. All right. So we swept the lows right here. This candle, right? Displaced below, that's a liquidity run. But here we could not displace below. We actually closed right back above. So that ends up being a liquidity sweep. We get the 2-2 reversal on the weekly. So we're looking for continuation up through this fair value gap. But you do need to be aware of the consequent encroachment on the weekly. I would mark it out just in case it proves to be resistance. On the daily, we end up with the inside candle, right? So we actually end up with a 2-1-2 reversal to the upside potential. Price, came back down, but it's respecting this fair value gap here that gets created, the structure break and fair value gap. It's respecting it. Inside candle started from the lows as well too, and then as you can see, excuse me, immediately starts to get bought up. So we're looking for that 2-1-2 reversal to the upside. This one is not obviously a fast mover. It moves less than $1 a day. So this one I definitely would not recommend, getting weeklies on. If you want to keep it close to the money, probably look at that 40 call. That would be your first target right there at 39.68. My bad. Second target is going to be 40.45. And then third target is going to be up here at 41.38. However, you should be aware be aware of potential resistance, right? Not only do you have a bearish fair value gap here, but you also have a bearish order block right there as well too. Okay. A fair value gap stacked below a bearish order block. So obviously, as you can see, evidenced by the bearish momentum that continues. So right around the 50% of that bearish order block is where your third target is. All right. So if you, that's the reason why I'm recommending the 40 call. I know it's relatively close, but again, we don't have a very fast mover. These contracts tend to be cheap as well too. So it's okay, to get some time on it. So the 40 call, for example, for September 20th has OI of 35,000, volume 2,600, and it's only $67 a contract, right? You can definitely get multiple contracts on that and still be less than 200. My math was correct. No, my bad. It ends up being 201 if I'm not mistaken, right? So 60 times 3, that's 180, 721. So yeah, 201. But either way, you get my point. You can still get multiple contracts on it, right? So entry would be 30, 39.42. And again, you have your targets. You'd walk your targets up. Now, if it goes bearish for whatever reason, even though the sector itself is quite bullish, your entry would be 38.99. If it invalidates this fair value gap, in other words, you would look for it to close below this previous high right here, and also close below the bottom of this fair value gap, right? If it does, then your next target is going to be here at, where is it? There we go. At 38.43. So for me, if it's going to go puts, I probably will look at the 38.5 put because I'm ultimately not bearish on this particular play, but just in case, we want to make sure that we have a plan for both sides of it, right? So get the 38.5 put. Obviously, I'll probably say go like 2 weeks out. If it hits 38.12, probably exit, call it a day, and be good with it. The ex-dividend day is on. So yeah, actually that might continue that bullish run, the ex-dividend day. Okay. Let me see what else we got. Let me go back to my watch list. The popular one. Tesla, right? So Tesla, what are we seeing on the weekly? Right, we're seeing um nice reversal here. Obviously, let's get rid of all this old stuff here. We get a nice reversal on Tesla after the retracement. Right, here's your run up. You get the retracement, and then is that OTE? If I'm not mistaken, let me see. Hold on 1 second. Started below OTE, but I mean, pretty much same area. Right, so actually not bad. But more importantly, Tesla finally holds above 200, right? Remember I said I wouldn't fuck with it until it finally holds up and displaces above 200. So finally did that, obviously with the first run up, but then I knew there was going to be a pullback, and there we go. We finally get it to hold above 200. So looking for that 2-2 continuation. We do get displacement above this fair value gap. So we're looking for that 2-2 continuation on the weekly. On the daily, as you can see, we did wick off of this inflection point at 220. However, it's still a two up, still a two up in force. So we're looking for it to continue pushing. As if I'm not mistaken, the drive sector actually looks rather bullish as well too. And full time frame continuity majority is bullish for Tesla. Let me see what the month looks like. Well, I mean, we do got 2 weeks left, so it is possible that we flip the month. So we just need to get to 220. Yeah, definitely possible that we flip the month green as well too, right? So if we flip that month green, that sets us up for a 2-2 reversal heading into September. So yeah, what would be the targets, right? So first off, entry. Let me get rid of this inflection. Actually, just move it over here. So entry is going to be at 219.80. Since Tesla's a mover, let me see where we at. What's this one? 234. So yeah, since Tesla's a mover, that's going to be my first target at the 230s. If we can clear this other inflection point right here, right? Small little gap fill as well too. If we can clear that gap, clear that inflection point, honestly, my next target, I'm probably taking all the way up here at 250. So I would say, depending on how much time you want to give on your contract, let me change that to target. Boom. Depending on how much time you want to give on the contract, I would either be looking at the 230s, 240s, or 250s for Tesla. Obviously, if you're doing 250s, I would, definitely get time on it for sure. Even though Tesla is a mover at almost $12 a day, definitely get some time on it because we're talking from 220 essentially up to 250, 255. So we're talking a $30 move, right? So definitely get some time on it. Even though I wouldn't recommend weeklies, if you're gonna do weeklies, probably like 225 or 230. 2 weeks out for 230 or 235, and then a month out, I would say for 250s for Tesla. But I do like the way that it's looking. Full time frame continuity. Just honestly, the only thing I'm really worried about is just it clearing this inflection point here, which obviously, if it clears daily entry, and displaces above it, then obviously that inflection point doesn't matter. And then the other resistance level will be this double top here at 234, this inflection point. So basically 235 area, right? A little bit of resistance there. And if we can clear that, then we're probably attacking the gap fill, right? If you don't see it, it's right here. Probably attacking the gap fill. So that 235 area is going to be pretty important because not only you have a double top here, 50% of the gap fills there, and you also have an inflection point. So that 235 area is going to be pretty significant for price to get above. So for me, I probably would target the 235 contract, probably go 2 weeks out. If it pushes up further than that, you can roll it into the 250s with time, or just give yourself a lot of time on the 235 and let it run. If it's gonna get past all of this potential resistance here. Go back to my watch list. Let's go to Palo Alto. Actually, I think Palo Alto has earnings. Yeah, never mind. We'll see what we'll talk about Palo Alto after earnings. No point in even talking about it right now until after earnings. All right, so we'll skip over that. Let's go to Apple's. All right, so tech does look good as a sector, in my opinion. On Apple, strat wise, we end up getting a 122 ref strat, right? Sweeping liquidity here, right? We don't invalidate the fair value gap because we never close below it. So this is still validated on the weekly. Oh, not bad. That's the wrong one. There you go. This fair value gap is still validated. Swept liquidity here, right? Because we end up displacing above, actually, we end up displacing above both liquidities, right? So that's a good sign, hence the 2-2 reversal. So strat wise, we're looking to TTO back to the upside, back up to what's that, all-time highs? Yeah, all-time highs. So we're looking at TTO back up to the high of this 237, 23. All right, so let's look at the daily real quick. So on the daily, again, we get displacement above this previous high. Nice fair value gap. See, and this is where you see like evidence of a strong trend, right? Fair value gaps creating more fair value gaps. This is how you know those fair value gaps are strong. If you get one fair value gap and not really much and no other fair value gaps after that, the trend is not very strong. You probably should expect a reversal at that point. But yeah, this is what we want to see. If we're looking at bullish trends or if we're bearish, we want to see fair value gaps created along the way. And like here, you don't really see too much of that created on this downtrend, right? So at some point, there's going to be a reversal, right? It's not going to continue to drop. We get the 2 up. So this is going to be your entry up here at 226.83. So you do have potential resistance along the way, right? There at 227. Small little gap fill here as well. I'm just going to leave it that color, but small little gap fill there. Obviously, you have fair value gaps along the way. So I would just say, be careful around 230s for Apple. And then next target after that would be up here at 230. So for me, I'm not really I don't trust Apple too well. So whenever I trade Apple, I tend to get close to the money targets. So 226.83 is entry. I probably would be looking at either the 230s. And again, I'm still gonna give it time, right? I know ATR means that it could get to 230 within one day, but Apple sometimes be playing games. So like I said, I usually try to get close to the money. But 230 because that's your second target on the daily. Right? So $4 move, obviously, if it continues to run into in over the next 2 weeks up to all-time highs, even better. But either 230 or if you're feeling froggy, 235 or 240. Just make sure you give yourself ample enough time for it to get there. However, full time frame continuity in your favor, right? We're not at the highs of any broad information just yet. I mean, I'm talking about larger ones. I mean, obviously this actually creates a broad information, but I'm talking about some of the larger ones when you look at the bigger picture, right? You get these lows taken out, created that broad information there. So actually, let me just draw it for you. From there to there. And then also the top would be from there to there, right? So as you can see with the larger broad information, you actually have a lot more room to the upside. Even though you're kind of in the middle of the range, you still have a lot more room to the upside. So yeah, we can definitely, if we get, again, if the assumption is if whatchamacallit doesn't say some dumb shit at Jackson Hole, the assumption is that we continue with the bullish move, and yeah, we could definitely see Apple north of 240 potentially. Like I said, I'm not really a big fan of Apple, not really a big truster of Apple, so I probably, for me, I would target the 230 contract. All right. There's more, but in the interest of time, last one is going to be let me go here. Actually, two more, because I forgot about energy sector. Let's take a look at, oh yeah, of course, forgot I'd written that one down. NVDA. So yeah, I like how chip sector looks just the same way I like how tech looks, right? So NVIDIA, I mean, all that happened was the pullback. And I mean, we've been talking about a pullback's been necessary for NVIDIA, right? All it did is it pulled back into the fair value gap here and respected it. It filled it. That's it. That's all that happened on the monthly so far. Unless we have like a crazy drop over this next 2 weeks. Yeah, that's all that happened. Respected the fair value gap. Um, could not displace into it. Ended up displacing above it last month. So if with the same behavior continues, we end up with a 2-2, a potential 2-2 reversal. Now we do have 2 weeks left in the month and $12 until we get to that next high. So we know over the next 2 weeks, based on NVIDIA's ATR, it is possible that we potentially go outside month. And then another thing, strat wise, is if price is currently above the 50% of the previous month, that also, it's not a guarantee, but probability, it increases the probability that it's probably going to end up going outside month. All right. So just be on watch for that, right? That 136, right? Let's get rid of you quick. All right. So now let's go into the week. So leaving that same monthly fair value gap open so you can kind of see like the confluences, right? So what do we have? We have a fair value gap, right? Price pushed down into this fair value gap, skipping over the first two here to get down to this one, bounces off of that, still respects this previous high, because again, we didn't displace below it. We opened here, closed up there. So we opened and we still closed above the 50% of this monthly fair value gap. Probably even closed above the 50% of this fair value gap here on the weekly as well too. Hence the 2-2 reversal. For me, I like that we closed above this inflection point. So again, we're looking for a 2-2 continuation, creating a bullish fair value gap along the way. If that's the case, yeah, next target is obviously going to be that 136 for the weekly. And then obviously you have all-time highs back up at the 140s. Looking at the daily, we actually get a bearish order block, right? And then a fair value gap stacked on top of it. So we're looking for bullish momentum and for another creation of that fair value, or excuse me, another fair value gap to be created. Entry is 125 for NVIDIA. Targets for NVIDIA, if we're going strat wise, would be 129. Oh, my bad. 131. Actually, no, it moved. I'm not going to really mark that out as a target. Then afterwards will be your 136, right? Those will be your three targets. Click this and get rid of it. Boom. Excuse me. Just need to be aware of this. I mean, it's small, but this is actually a bearish order block right here as well too. Just so you need to be aware that you might find some resistance. So for me, I'm probably looking at the 130 call again. It can happen in this week, but I like given time, so I'll probably look at the 130s for next week for NVIDIA. Earnings is on the 28th, so yeah, again, 2 weeks out. get the 130s. If it hits this week, then you can choose to hold and swing it through into the following week and potentially for it to get all the way up to 135, excuse me, this 136.15. If you want to get the 135 call, definitely go 2 weeks out. For sure. Do not do weeklies, in my opinion. Yes, it can do a $10 in 1 week, but don't corner yourself into that. Um, that theta decay will probably kill your contract real quick, especially if there's no movement on any given days this week. Okay. All right. So obviously, again, there's a lot more that's going to get put out by the other admins. And there's definitely a lot of good setups this week. Um, but honestly, yeah, some of them revolve around earnings. Snow is one that I'm looking at potentially to get in for weeklies before earning if there's actually a decent enough movement. I may not be able to trade again this week. Like last week, I was only able to get pretty much one trade lift. So I'll try to alert, what triggered, but I may not be able to get into it. So I won't be able to alert percentages per se. Um, but if, again, pay attention. If it triggers, take it. Cool. If not, then, it is what it is. And that's all good. If there are no questions about any other tickers, um, next Wednesday, we'll do a trade recap. We'll talk a little bit more about different concepts. So last week with the strat, we talked about broadening formations and the combos and how to deal with inside candles. We'll probably look at some more of the combos. Um, and at the end of September, we'll look at, we'll talk about uncoupling as well too, even though we've talked about it before, just kind of get you guys used to that. Um, and then also we'll talk about liquidity. We'll keep talking about liquidity when it comes to ICT, because I think once you guys figure that part out, it's going to make things a hell of a lot better as far as, learning the difference between liquidity sweeps versus liquidity runs, and also with finding targets as well too. All right. So if there's no questions, I'm gonna say y'all have a great night. I'll post this once it's done converting inside of the Tensho Zoom weekly sessions. And yeah, I'll see y'all in the chat. I didn't know y'all could do doggy faces. That's kind of cool.